Hi everybody, this is the second lecture for this topic. In this lecture, in this video, you will learn several classification of costs. Okay, the first thing that you will see here is the differences between variable cost and fixed cost. I think most of you knew about this. How cost will react to changes in the level of activity within the relevant range. Okay, total variable cost will change when activity changes. Total fixed cost remain unchanged when activity changes. Okay, this cost classification is related to cost behavior. Cost behavior means how the cost increase and decrease. Okay, let's see what is a variable cost in what and what is a fixed cost. Okay, this is a variable cost. So variable cost, the simple definition for a variable cost is a cost that will change when quantity of production changes. If you see a cost that will increase when quantity of production increases, then that cost is a variable cost. Okay, this is a daily life example. Your texting bill is an example of a variable cost. You send one text or SMS, you will be charged like 30 cents. Two texts, you will be charged 60 cents. 3 texts, you have to pay 90 cents. So that is an example of daily life variable cost. If you in a business, if you have a manufacturing business, an example of variable cost is the direct material cost. Let's say you have a business that produces soft drink. One soft drink you pay RM1 and $1.50 variable cost, direct material cost. One soft drink, one bottle of soft drink, you pay $1.50 direct material. 2 bottles, $3. 3 bottles, $4.50. 10 bottles, $15. 100 bottle, $150. So that is an example of a variable cost. The higher the quantity of production, the more the business has to pay. That is the variable cost. And another example of variable cost is the direct labor cost. If you have a manufacturing business, you will know that the direct labor cost is a variable cost. The more your business produce, the more you have to pay the direct labor. Okay, that is about the variable cost. In this slide, you see the total variable cost line. You see the line, the higher the number of the quantity, the higher the cost. That is the total variable cost line. But here you see the unit variable cost line. Unit variable cost line is like a horizontal line. In this example, the tax is 5 cents per tax. The variable cost is 5 cents per tax, per unit of the factor. So you send one tax, the cost is 5 cents per tax. You send 2 tax, the total variable cost is 10 cents, but the unit variable cost is still same, 5 cents. You sell 100 tax, the total variable cost is $5, but the unit variable cost is still same, cents per tax. For example, we use the soft drink example. You have a soft drink business. The unit direct material cost is $1.50 per bottle. So direct material cost unit variable direct material cost is $1.50 per bottle. If you produce one bottle, the total variable cost is $1.50. The unit variable cost also $1.50. But if you produce 100 bottle, the total variable cost is $150. But the unit variable cost is still $1.50 because the unit variable cost equal to total variable cost divided by the quantity. So total variable cost is $150 divided by the quantity is 100. So you get the unit variable cost is equal to $1.50. The unit variable cost is always same, but the total variable cost will increase when the quantity of production increases. Okay, now see what is a fixed cost. Fixed cost is a cost that will not change even though the quantity of production changes. A fixed cost is a cost that does not change even though the quantity of production changes. For in this slide, it shows a daily life example, which is the monthly contract fee for your handphone service. If for a business, the typical example is the factory rent. You have a business that produces soft drink. You rent the factory. Every month you pay $10,000, for example. So that rental expense of $10,000 is fixed cost. Because if you produce 100 bottle only, you still have to pay $10,000 per month. If you produce 1,000 bottle, still you have to pay 10,000 per month. Or you produce 10,000 bottles, still you have to pay the rental $10,000 per month. That is a fixed cost. Another example is factory insurance, factory building insurance. Let's say you pay the factory building insurance $3,600. No matter how many unit of soft drink you produce, you still have to pay the same amount, $3,600 per year. What else? Factory rent, factory building insurance, depreciation of the equipment. If you have a factory, there are many equipments that you use. You have to record the depreciation every year. The depreciation is same. So the depreciation is an example of a fixed cost. So the total fixed cost line is like is like the one that shown in the slide. It is a horizontal line. It is fixed no matter how many units you produce. The total fixed cost is same. But unit fixed cost graph is like you have seen here in this slide. Unit fixed cost, the formula is unit fixed cost equal to total fixed cost divided by quantity. So for unit fixed cost, the more or the higher the quantity, the lower the unit cost. If you produce one unit, then the unit fixed cost is very, very high. But let's say you produce 10,000 units of product, then the unit fixed cost is very low. Always remember the formula. Total fixed cost, unit fixed cost equal to total fixed cost divided by quantity. Okay, this is the summary for fixed cost and variable cost. Okay, let's see this example. Which of the following costs will be variable with respect to the number of cones sold at Baskin and Robbins shop? Okay, so remember the definition of variable cost. Variable cost is a cost that will increase when the quantity of the product increases. So what is the answer? The answer is the cost of the ice cream. The more ice cream, the more cost. And the cost of napkins for the customer. The more customer comes, the more you sell, the more cost for the napkins. The lighting of the store and the wages of the store manager are fixed costs, because the lighting is same. You sell one ice cream, the lighting is same for one day or for 1 month. You sell 10 ice cream per day, the lighting is same every day, for every month. The salary of the store manager is same also. The wages of the store manager, every month you have to pay a fixed amount to the store manager. They are fixed cost. Okay, direct cost and indirect cost. This is another category of cost. Cost can be categorized as direct cost and indirect cost. So very easy this one. Direct costs are costs that can be easily and conveniently traced to a unit of product or other cost object. So the examples are direct material and direct labor. So if there is a question asked you, calculate direct cost for this product. So the answer is direct material cost plus direct labor cost. Direct material, direct costs are costs that can be easily and conveniently traced to a unit of product. When you see a product, you can see directly what are the direct material, and also you can calculate very easily the direct labor cost. So that's why direct material and direct labor are called direct costs. Indirect costs are costs that cannot be easily and conveniently traced to a unit of product or other cost object. The example is manufacturing overhead. So indirect costs are costs that you cannot see how it relates with the product. The direct costs, the manufacturing overhead costs are indirect costs. Manufacturing overhead are indirect costs. Remember the example of manufacturing overhead, like indirect material, the salary of the janitor, the salary of the factory supervisor, factory rental. When you see a product, you cannot see the relationship between the manufacturing cost and the product. That's why the manufacturing overhead costs are called indirect costs. If a question asks you to calculate indirect costs, so you just calculate the total of the manufacturing overhead costs.